AMD had the earnings call and have surged past $400 per share. I want to analyze NVIDIA and AMD, compare their revenue, net income, return on invested capital, as well as their forward valuation, as well as a brief fundamental analysis. On the left hand side we have NVIDIA, on the right we have AMD. We have the market cap, which NVIDIA is at 5.2 trillion and AMD is 740 billion. This data is as of the 10th of May. So, 2025 revenue for NVIDIA was 215 billion versus 34 for AMD. Operating margin for NVIDIA is 60%, AMD is 10%. Revenue change or growth is 65 for NVIDIA and 34 for AMD. Both great companies. Net income for NVIDIA is 120 billion and 4.3 for AMD. So you can already see, even though the revenue is several times higher, their net profit is different. Looking at 2024, the data is similar. 130 versus 26 billion. Operating margin 62% again and 7.4% for AMD. Net income again similarly. The ratio is not quite the same as revenue. This is because operating margin for NVIDIA is massive. But the more interesting part is the forward valuation. For 2027, NVIDIA trades at 19 versus 35 for AMD. And what this tells us, I have noted it here, forward PE tells us how much investors are paying today for every single dollar of expected earnings. And for 2028, 15.6 for NVIDIA and 25 for AMD. And of course, these change every time analysts upgrade or downgrade their EPS targets and so on. So it doesn't mean this is a set and forget metric, but it gives us something. And we move on to return on invested capital. This shows us how efficiently a company uses invested capital and what profit they actually make. So for 2025, NVIDIA achieved 135% return on invested capital versus 6.6 for AMD. 175 for 2024 versus 2.7. So every dollar that NVIDIA invests returns much more than AMD. But personally, my favorite one to look at is research and development intensity. This shows what percent of net income is invested in research and development. So for NVIDIA in 2025, they invested, well, it's better to start with 2024 actually, because it paints a clearer picture. 2024, NVIDIA utilized 10% of their revenue for research and development, and AMD, utilized a quarter of their revenue for research and development. And 2025 was similar, even though NVIDIA did spend a bit less on research and development, as well as, of course, AMD. But the shocking figure here is that AMD is spending more or less a quarter of their revenue for research and development, which are the things that make a profit for them. The unfortunate part is that for every single dollar that they make in profit, their net income is quite negligent, to put it mildly. Now, SG&A, this is basically how much of the revenue is consumed by selling, marketing, administration, things like that. And again, this is something that it's not talked about much. We only look at year-over-year growth, but look at this. 2024, AMD spent 10% of their revenue to make admin costs and sales and so on, versus 2.7% for NVIDIA. Now, 2025 is different because NVIDIA spent less than the previous year, whereas AMD had to spend more, 12% of their revenue. And what this tells us is that even though their market share grew and their revenue grew, it means that they had to spend more in order to sell, whereas NVIDIA had to spend less to sell. And this is where AMD versus NVIDIA comparison becomes even more important, because valuation alone does not tell the full story. A stock can deserve a premium if the business quality is exceptional, but in AMD's case, I think the stock price is assuming a future that will probably never ever happen. And a good example of this is the OpenAI deal. OpenAI and AMD announced a major partnership half a year ago, I'd say. And as a part of that deal, AMD issued OpenAI warrants for up to 160 million AMD shares, which they are tied to some deployment milestones. But in simple terms, they will sell their own shares to OpenAI if OpenAI buy their product. A bit odd. And even a more recent development from the recent earnings call, AMD will supply Meta with GPUs, CPUs, and so on. And again, they are issuing Meta a warrant to purchase 160 million shares, which is about 10% of the company. And if we combine both deals, that means that AMD effectively sells 20% of its company for the privilege to be a competitor to NVIDIA. Of course, this gives AMD supposedly credibility in AI infrastructure, and it does show that major customers do want alternatives to NVIDIA. But there is another side to this. One can argue that AMD had to attach a massive incentive to encourage OpenAI and Meta to commit to future deployments. And that does matter because AMD is not the default AI platform. It is still trying to win strategic customers away from NVIDIA. And if a company needs to offer a major equity incentive to secure demand, then that demand is utterly different from NVIDIA's situation, where the platform is already the default for many AI workloads. And this is the deeper difference between the two companies, basically. AMD is it's a brilliant company, but it is primarily a high-performance CPU and GPU company. Their EPYC CPUs, both in the consumer as well as the AI infra market segments, are very, very strong. And the Instinct GPUs are becoming arguably more relevant, but NVIDIA is a full-stack AI infrastructure company. NVIDIA sells GPUs, CPUs, DPUs, data processing units basically, and the new Grok-based LPUs, which are going to be used massively for inference. But they also sell networking cards, switches, interconnects, NVLink, full rack-scale systems. And of course they have their CUDA libraries and so on. And they're not only selling chips basically, they are selling an entire computing platform, everything. And at small scale, I have seen many people compare GPU versus GPU. For example, one of the AMD Instinct GPUs performed better at FP16, floating point 16, which are used for matrix multiplications. And that's lovely, but in an AI data center, you have to connect millions of GPUs together. Well, okay, hundreds of thousands of GPUs together, not one. Remember, it's one giant supercomputer. So at AI data center scale, the comparison becomes system versus system, not GPU versus GPU. And from the AI series playlist that I have, the bottleneck, as we know, is not only raw compute, but it's everything. It is memory, networking, interconnects, power, cooling, software, utilization and deployment speeds, as well as developer support, are things that I haven't discussed, but they are massively important. And this is where NVIDIA has a massive advantage. The customer is not just buying silicon, the customer is buying a complete system that has already a deeply integrated ecosystem. And this brings me to the main point, basically. AMD is priced in terms of valuation as if it is going to become a second NVIDIA. But the business fundamentals do not support that valuation at all. Not at all. I would not buy AMD with a 6% return on capital invested, as well as 10% operating profit margin, with a double forward price to earnings ratio, I would not buy that instead of something much cheaper. And the hopes for AMD are possibly that just because it is a smaller company, it has more room to grow. But look at Beyond Meat. Look at a lot of the not profitable businesses that we even have on the market. Just because a company is smaller does not necessarily mean that it will grow more. Sometimes quality is the better thing to purchase. AMD is a good company, and the problem is that the stock price, well, it prices in a business transformation. AMD is valued as if they will scale massively, margins will expand dramatically, software adoption will improve, and that NVIDIA's dominance will weaken, and AMD will move into the broader AI infrastructure market beyond just traditional CPUs and GPUs. And those are a lot of assumptions in one valuation. Even if AMD revenue, let's imagine that the revenue for AMD and NVIDIA here is the same, 215%. It still takes AMD 10% of their revenue to sell that, and their return and their research and development intensity is still 25%, and their net profit margin is 10%. So even if everything is the same except the operating margin, it's still a much more profitable company, NVIDIA, that is. And transformations do happen. So it is technically possible, but for every, as we see, for every $100 of revenue, NVIDIA keeps 60, AMD keeps 10. So raising revenue guidance is not enough. And this is why I think AMD's valuation is dangerous. People are getting on the hype. The market is pricing AMD for growth, margin, and all sorts, basically. And that is not just execution risk, it is transformation risk. And when we look at the numbers, we see that AMD does not look cheap compared to NVIDIA. It's actually more expensive. And NVIDIA has the higher margins, ROIC, the software lock-in. I won't repeat myself, but that is the fact. And that does not make sense to me. So here is my final view. AMD is not overvalued because it is a bad company. It is a beautiful company. But it is overvalued because the stock is pricing in the future that it's not even proven as a possibility. And when people say AMD is cheap compared to NVIDIA, I do not see it. There isn't a single metric that proves this thought. AMD is smaller, but it does not mean cheaper. In fact, based on the numbers that we see here, AMD is actually the more speculative valuation. It needs way more things to go right. Whereas NVIDIA can slow down and still remain an exceptional and profitable business. And AMD has to transform into something much bigger, much more profitable, and more strategically important to justify today's price, without even taking into account the 20% dilution that they are doing. And that is why, in my view, AMD looks massively overvalued relative to the fundamentals.